Joining us now is BD8 Capital Partner CIO Barbara Doran and Crossmark Global Investment CIO Bob Dahl. Happy Friday, guys. Barbara, it seemed a little scary there maybe yesterday when ADP came out and like good news is bad news again, but then we got sort of like pretty good news today and things seem to have stabilized. What more do we need to know, maybe from bank earnings, maybe from other metrics, to know how to invest from here?
Yeah, John, it's pretty surprising after that ADP number. I think people had upped their estimates, for what would happen in terms of job creation, but it was surprisingly low. And that, I think, when you combine it with the number of job openings that's coming down, there are fewer job openings, there is more supply of workers. So that looks like things are slowing down. On the other hand, you've got strong wages, even though it's moderating, you've got strong job growth. You saw the unemployment number is still at 3.6%. And so you've got a very interesting mix here in terms of what's happening with the economy. I think what it means, the Fed is encouraging, but inflation is still a little bit stubborn. And I think the Fed is going to have to stay high for longer. And that's going to mean, a push out in terms of looking for that cyclical trade. But, we will see. We've got CPI and PPI next week, and I don't expect much change there. And it'll be incremental one way or the other. So we will see what happens.
Bob, you also expect higher for longer. And so are you just staying the course with your strategy here, or do you make changes?
Yes, the 0.4% month over month wage rate gain, 4.4% trailing 12. That's not going to make the Fed happy. They have more work to do. And I think that, it's the fourth time they've raised their dots. Now it's two more times. I wouldn't be surprised if we see 6% before this is all over. The Fed has to slow the inflation rate down. Otherwise, it'll get away from them.
Yeah, I mean, we had the Fed's Austin Goolsbee on CNBC earlier today, Bob, voting member. And he basically said that the golden path would be to bring inflation down without a recession, and that he feels like we're, quote, on that golden path. You sound more skeptical.
That's threading the needle, and maybe it's possible. We've had 9 attempts at that in the last 60 or 70 years. 2 of them have worked. 7 have resulted in a recession. So the odds are not great. I hope they're successful, but I think that's a tall order.
Yeah. Barbara, I want to get your thoughts on the action we've seen in the bond market this week, because it's been very dramatic with Treasury yields. And I wonder what it signals or what it helps to foretell in terms of the bank results that we'll get or start to get a week from today.
Well, I think bonds are obviously very sensitive to what they think the Fed will do. And you saw that yesterday when yields jumped up, when the ADP number was nearly 500,000, more than double what was expected. So I think that once banks start to report, if they report, a contraction in credit, I think that's actually going to be positive in terms of what the Fed is looking to slow down the economy. But if they're seeing things going still gangbusters, consumer credit fine, I think, that could be a problem in terms of the market wanting to see rates, either hold here or go a bit lower sometime next year.